Did you know you may be paying unnecessary taxes and penalties on your IRA withdrawals? And this is especially true if you're doing Roth conversions. Many retirees don't even realize that the way they pay their taxes actually matters. So in this video, I'm going to show you the 2 different ways you pay taxes and why it matters, and how a tax hack can actually help you avoid those extra taxes and penalties. The first way you could pay your taxes is withholding. If you're working and you get a paycheck, your employer withholds a portion of that paycheck to pay federal and state income taxes, also Social Security and Medicare taxes. And at the end of the year, if you paid too much money into the system, you end up getting a refund from the IRS. And if you paid too little, you owe the IRS a little bit of money. The second way you could pay your taxes is through estimated payments. This is typically for self-employed individuals. Let's say you're a business owner or an investor or even a retiree. You don't get a paycheck. So what you have to do is estimate how much you should be withholding and make quarterly payments to avoid any undue penalties or interest. So for example, if you're a self-employed individual making $80,000 a year, divide that by 4, that's $20,000 per quarter. And so you need to make estimated payments as if you're making $20,000 per quarter. Keep that in mind as we go through this video. Of the 2 different ways you can pay your taxes, the government prefers withholding because it's a steady, predictable tax revenue. And if they were holding your money every time, it's hard for you to fall behind on your taxes. Now here's a key point, and this is especially true if you're a retiree. So you probably know that Roth conversions are a very powerful tax tool that can help you save millions of dollars in taxes over your lifetime. The problem is conversions count as income and the government wants their money. And they want you to prove when you took the income and whether you paid your taxes on time or not. But this is more like a guilty until proven innocent situation. Let me explain. Let's suppose you did a Roth conversion at the beginning of the year and you failed to make your estimated payments. What you want to do is to avoid paying that underpayment penalty. And here's a way around that. And this is where the tax hack comes in. And it has to do with the preferential treatment of withholding tax over paying estimated taxes. Otherwise, you may be hit with penalties and interest for underpayment of your estimated payments. What you can do is calculate the amount you expected to owe in taxes from these conversions that you completed throughout the year, and take the dollar amount of that from your IRA account and have 100% of the taxes withheld toward the IRS. Because it's going to be categorized as a withholding, withholding taxes are preferential, as we previously said. And the IRS thinks that you did the regular payments throughout the year because it's categorized as withholding, and you will avoid the underpayment penalty. But Jeremy, hey, I don't want to take money out of my IRA account. Is there a way that we can put it back in? Yes, there is. What you can do is the money that you took out, that you did 100% withholding, that dollar amount, you can put that money back in with your after-tax funds, and you can categorize that as a rollover. There's what's called a 60-day rollover rule. You can add that exact dollar amount back into your traditional IRA as if you never took the money out. For example, let's say for instance that you needed to pay $20,000 in taxes on that Roth conversion you did at the beginning of the year. You take the money out, 100% of that $20,000 is withholding, remember, it goes to the IRS. And you're like, hey, I kind of want to have more tax deferred growth of my traditional IRA. You could take $20,000 from your taxable account, put it back in your traditional IRA, and categorize that as a rollover. Now, you have to do that within 60 days, and you can undo 1 rollover per year. Be sure to like and subscribe. Each week we release a video that talks about what to do to get to and through retirement. Before you implement some of these strategies, be sure you talk to someone who knows what they're doing. You can feel free to reach out to us. The information is in the description. We have another great video coming up about the things you need to know before you retire.